Mark Selby, how are we, sir?
Excellent. Gong Ha Fa Choi.
Gong Ha Fa Choi to you as well. My goodness, that's a blasphemy. I haven't heard that phrase for a while.
It's the Cantonese version. Toronto's more Cantonese than Mandarin. So that's.
I was brought up, when we were growing up, I had two Chinese ladies. They worked for us, and they would teach us various phrases. I thought your pronunciation was like exquisite. I'm joking.
That's all. That's you've just seen 33% of my Chinese vocabulary used there. So there we go. Yeah. So.
I'm assuming one of the other phrases is ordering beer. Can you do that in Chinese?
No, I don't drink. I'm gluten free, so I don't drink beer.
True. That's true. Should we talk about nickel then? Because our language girls are
sure. There
genius.
We go. Yeah, people are probably about to turn off this. Yeah, listen to this.
I think so. Our one listener is reaching for the dial now. There's more than that. There's more than that. So I think I'm looking forward to this one because I think there's been some drill results out, there's some announcements made, and we're going to talk generically about PEAs because there's a few things worth looking at as various announcements get made and perhaps worth just eyeing it. It goes over some of the stuff we've talked about in the past few weeks and months, but I think worth mentioning today in the context of some stuff that's come out recently. So we better start with what's happening in the marketplace. We're coming up towards Chinese New Year. Is anything happening?
And the last week has been metals on steroids. You know, we had spent the prior couple of weeks kind of drifting down to support levels. And again, I think a good sign of what might come post Chinese New Year. You know, we saw both nickel and copper on steroids up over 5% to, they had broken through some ceilings and they're all both at multi-year highs. And so, we'll see how things go through the next couple of weeks. Again, as liquidity quiets down with one half of the world on holiday, we'll see if someone's going to try and shove the market higher or lower. Again, given that we're at all year highs, if people are short at all, we'll see whether they want to try and give it a shove lower. If we come out of the, Chinese New Year is 1 week, everybody, and kind of 2 weeks, a lot of people, if by the end of the second week, we're still at prices that are pretty close to today's or higher than today's level, then I think that's an extremely bullish sign, for the rest of the year.
Amazing. There's also, notice, and someone's stolen our catchphrase. Okay. You need to know, right? So we said it first. And now you've got people like Goldman's copying us. Yeah. That's the way I'm interpreting it anyway.
Exactly. Well, we might have stolen the Supercycle phrase, before other people, but we were talking about that in mid-May, and it's nice to see, the bulge bracket commodity analysts making the tough calls after metal prices have run up more than 50% in a year, and now talking about Supercycles. JP Morgan was particularly entertaining because they started the year with sort of a contrarian bearish call that they've now in just 1 month reverse track on. Again, I would say to
what were
investors
they calling?
out there,
what were they calling it at?
Oh, they in the beginning of the year with sort of a contrarian short-term bear call on it. And as prices moved higher again, they've now flipped, and they're sort of full on, we're, in a great big super cycle that's, demand is going to outpace supply's ability to catch up.
Isn't that scary though? Do you find that scary? Right? Because you got JP Morgan, bunch of very clever analysts, young brains, the best of the best, because they get to, these Goldmans and JP Morgans get to hire the best people first. And these guys are calling it wrong. And I kind of jokingly say to people from when I was as an analyst, the things I did not know then was ludicrous. Right. And yet we're putting out these reports, we're trading, we're left in charge of money, which quite frankly, I'm not sure if we should be left in charge of a running tap most of the time. So to have someone like JP Morgan make that kind of call, then interesting. And then just a switcheroo overnight is insane.
Oh yeah, no. Unfortunately, being around this for 20 years, I've generally, there's a few very good people, and I think I referenced some of those people in some of the earlier calls, who do another level of research deep and, ask the hard questions. But No, I like the generally the level of analysis. I use it as a lagging indicator and usually as a turning point. So as we move through the super cycle phase, one of the things to look for, because again, when is it going to top out? So mid-May we made that call. If you bought the copper stocks that we had suggested at that point in time, most of them are up 6 and 7x. In the past 2 weeks, you've probably made your purchase price on those stocks.
Should we just have a moment there? If you had picked the stocks which we were talking about back in May, you'd have made 6 times your money.
Yeah.
Should we just take a moment to internalize that, folks? I say that kind of slightly jokingly because I've had a few people reach out to me, and it was a kind of funny one actually. Someone reached out and said, based on your body language, Matt, my body language, this is scary. I didn't know where this was going. I made 3 times my money on the companies that you obviously liked, that you've interviewed. And I just thought it was really, right. That's one way of doing it. Or you can listen to professionals like Mark who know the market for the last 30 years. That's another way of doing it. But both equally good. Both equally good.
Yeah. Again, one of the ways, as we're in the midst of this super cycle and nice run up, when should we start looking for a top, right? And obviously, hitting the sell button, well before that top emerges, because you don't want to get stuck on the downside, trying to sell it as things move down. And again, super cycles do not last forever and are generally far shorter than most people predict, because again, they get into it about 1.5 years into what was the super cycle before making those calls. So what you need to watch for with the big analysts is, as long as they're, because again, their forecasts are generally behind where the price is, as long as they're just closing the gap between their forecast and where the current price is, you're safe. Where you will see, what have always used as a good sign of a top is when you see bank analysts get confident and start taking a price that's already high and start forecasting above that price. For a year or 2 out. So when they start getting that confident that this is going to continue, or copper prices or nickel prices are going to start to move it to all-time highs or above the multi-year highs they already at, that's when you hit the sell button and sit tight until we get to the next bottom again.
So, but explain that a little bit more. Obviously, it's. I know you're saying that they missed the boat at the beginning, then they get overconfident, and they're quoting above the price. Why is that a thing for you?
Yeah, because again, so again, on the way up, they're chasing the actual price the whole time. So their forecasts, they're not confident enough to say, okay, that today's price is sustainable. Because again, at the end of the day, you only get fired if you're really, really wrong. So most commodity analysts have a tough time for doing 2 things. One, forecasting a very significant move from where the current price is, or being, in terms of their supply demand numbers, anything like that, being too far away from whatever the long-term average is, right? Because again, if you don't make a big guess, you can't be too wrong. And the only way you get fired is if you're too wrong on a call. So you really never make a really bold call. Right.
So at the beginning, that's job safety. So they're not going to go wild. But when they get overconfident, what's happening there? And why is that making you nervous?
Yeah, because again, what it takes is they probably spent 2 years, upping their forecasts to get to that point. And generally, again, cycles don't last forever. So, in the time that it takes them to get confident enough, we're probably 80 to 90% of the way through a cycle. And then, they'll say, oh, okay, it's going to go up for another year or 2 because it's different this time. And as soon as you start to see that language and those types of forecasts emerge, hit the sell button. You might be wrong again, wrong for another 6 months. Prices might move another higher, but I can guarantee you, 90% of the time, a year after those calls, prices will be, on their way down again.
Right. So you may want to hit the sell button, or you may say within the next 3, 4, maybe 6 months, we're probably going to reach this top because you've got 80, 90% captured already, and you don't want to be riding it down the other side. Okay, understood.
Yeah.
You've had a good week. I mean, a bit of a crazy week, right? Just in the context of what's what you've been just saying there, you guys are definitely being looked at.
Yeah, no, the stock's moved up 50%. We now hit an all-time in a week, just over a week. We hit a new all-time high, at the close yesterday. I think we've had somebody shorting the stock since the fall. So, every time we had some good news, some of that gain would bleed away. So, again, with that short squeeze, it's probably overshot a little bit, but it just really reflects, the news flow that we've had, over the 6 months in terms of, valuation where we are right now. And obviously we've got, a lot of news coming down the pipe in 2021. So hopefully this is the first leg up, in what will be another very good year for the company. Yeah.
And it's funny, we noticed that actually we in response to something that you said a couple of weeks ago, and we some tweets, and some of people in the club actually made us aware of them. A fund manager was talking. It was kind of clear that, kind of like it happens in gold too, when people talk about low grade bulk, not everyone understands it and not understands how the economics of it and how you do it. And we kind of put a little piece out this week too about, well, actually, I'm not quite sure that understanding is correct, and perhaps. Here's a way using, historically, there are lots of big multi-billion-dollar deals done with low-grade bulk. And this, like I say, it's the same with gold, and it can be the same with other commodities too, copper, etc. Yeah. So there's nothing wrong with low-grade, nothing wrong with it. Some very big companies, low-grade, various commodities around the world. So it's how do you economically extract it? So I just thought it was interesting that you could have someone so, I'll go experienced, in finance, get it so wrong. And it just shows you that if you kind of, cascade down through to retail, inexperienced retail, you could easily see why they might feel the same way or want to think about it the same way. So it just shows you, well, we talked about JP Morgan, Goldman Sachs getting it wrong for long enough, with all the smartest guys in the world in there, and you've got fund managers getting it wrong. It's easy to see how retail and high net worth families can get confused too. Because it's just, low grade sounds low grade.
Right. Yeah. No, and that's where, again, it's really about, look for, reasonable comparisons. Again, in some things where, and again, this has been a challenge, there aren't that many of these types of deposits that sit on a standalone basis within a public company. So I can't point to 5 different companies that have a similar deposit and here's how they're valued. So what you have to do is look for sort of the next best alternatives. And so again, in the case of low grade nickel, there's lots of low grade copper projects that are mined in Canada. So again, you can benchmark capital costs, you can benchmark operating costs, and again, without having to take leaps of faith, you can get comfortable that, okay, this project should operate, with this kind of operating cost. This project should operate with this kind of capital cost, And so, again, I think that's one of the things we've got this week: drill results, resource upgrades, and PEA. So, I think as we go through them, we'll just sort of reiterate, the key thing with a PEA, you should always find a good benchmark, and hopefully a couple of good benchmarks, that are as close as possible to whatever whatever the project put out, and then use that as a comparison, in terms of each of those dimensions. So again, capital cost is the mine capital cost. How does that compare? If it's a similar scale operation for underground versus open pit, again, that's a key differentiator. Is it a very deep deposit or is it a shallow ramp deposit? You start to look for those characteristics, and again, you'll see if you've looked over time at a bunch of these projects, that those capital costs cluster, in sort of, nice buckets, in terms of generally what those costs are. And again, sometimes there's some very unique circumstances, but, the management teams of those companies should point out very clearly in not engineering speak or technical speak, make an average investor or fund manager understand, okay, we're this much cheaper because, A, B, C, D, and that's why we're 20% below, or 10% below. What drives me crazy is when you've got, comparable benchmarks, and they're literally half the cost with no explanation as to why, they're half the cost. then you need to look at operating costs. And again, there's the mining cost, there's the processing cost, and then there's the G&A cost. And G&A, again, for smaller scale operations, that's one of the big benefits of having a great big mine is when you've got the same boss and the same number of senior managers, and if you're processing 50 million tons or 500,000 tons, that senior team is about the same dollar amount. So on a per ton basis, the large operations have a huge benefit. And that's something, again, where I see a lot of engineering studies for smaller mines, just the G&A cost is nowhere close to what the actual costs are. And again, it's not hard to find. You can find 43-101 reports for other projects that give all that for operating assets that provide that level of detail. And then on the processing cost, again, most mills, a mill is a mill is a mill. You crush and grind up rock. You float it in the case of sulfide minerals. In the case of gold, you've got various ways to recover that gold. And again, each one of those flow sheets at certain scales, has a certain cost. Whether again, one dimension there is are you in a pure greenfield area in the middle of nowhere where you also have to build all the infrastructure to support the mill and mine, or are you outside of a town in a highway on a former producing mine site that has, all of the utilities, there ready to go. So those are some of the dimensions that you need to look at, when somebody puts out a PEA to say, is this a reasonable capital number? Is this a reasonable operating cost number? And if I take the proxies and dump those into the numbers, how does that value change? And I can tell you, you can take projects that have, they publish and they say it's worth 500 million, $1 billion, and you can very quickly get to zero very, very quickly. So yeah, I would encourage you to, make sure to do your work, on those types of studies every time you see one come out.
Absolutely. And not everyone's going to be capable of doing those studies. And here's the thing that I see, and we've experienced it just last week where, such a company, well, who do you consider your peers? And they go and list a bunch of companies. And I'm like, they're not even close to being your peers. They're close to being companies that you want to be perceived as being like, but they've got nothing to do with your asset, the scale of your operation, any of the technology required to actually extract the metal from the ground. And it's difficult as a retail investor to go, well, that's right or wrong, right? So I think it's incumbent on the companies to be a little bit more honest. And, in the example we did last week, the 6 companies they named, none of those were peers. And we came up with our own list of 4 peers. And then it gets a little bit easier to do some comps around numbers. You've got to do your digging, I think for sure, or at least go to someone that you trust and can have some level of confidence in their ability to say, well, let's do those numbers for you, and that makes it a lot easier to kind of work out. Because I think the other bit of this, when we started talking about low grade bulk, I know you're a low grade bulk, but we see headlines from high grade numbers, whether it be nickel, copper, gold, or whatever. And people get excited by that because high grade sounds better than low grade. But again, let's get real here, guys. If you're chasing narrow veins of whatever it's silver, gold, copper, nickel, whatever, the economics are dramatically changed because, and we put out a piece just this, I think last week on smearing. You got to understand technically what you're getting into, because just the headline of high grade, it doesn't automatically equate to I'm going to make a stack of cash here. Because some of the things.
Oh no!
Talk through some of the things you've talked about in the past are obviously the widths.
Yeah.
Right.
Yeah. No. Again, it comes down to the mining methods you can use it, and again, when you look at different types of mining methods underground, you can do some very bulk. You again, open pit can be a few dollars a ton. So at the scale that we're talking about, it's a couple dollars a ton. You can do large, very bulk mining methods underground in terms of block caving and sub-level caving, and those are, low double digit or even high single digit, per ton mining costs. Then there's some other more long, bulkier ones at to $20 to $40, but there's a lot of mining that happens, and it's $60, $80, $100 a ton, just because again, that high grade intersection you're looking at is just over a few meters wide, and you can only mine so many tons of that on per day. And when you're underground, again, what people don't realize is that there's a whole pile of development tunnels, so forth, that need to be built just to get you to that place where you want to mine it and then pull the ore out. And so that little bit of tonnage has to support a whole pile of setup work, to be able to just mine it. Again, I can tell you from like firsthand experience. So when I was, past life with RNC, we acquired the Reed Lake mine, 30% interest in it, which was operated by Hudbay. I believe it was either the fourth or the sixth highest grade copper mine in the world. In an established mining camp. Hudbay has been mining these types of deposits for literally, 90 years. They're very good at it. But when we made we made a 4x, 5x return on investment in 3 years. So it was an excellent investment. But, despite being the fourth highest grade mine in the world, our cash costs, were anywhere from $1.50 to $2.50 a pound. That's what real operating costs, in a real operating mine look like. So I know the core looks sexy, and it's always exciting to see it. But it can be very expensive to mine. And again, just be very confident when you see any type of engineering study come out that, in terms of the mining method that they're using, are the mining costs that they have for that, really, really comparable, given what the scale of the operation that they're really looking at is going to be. So, yeah, essentially. So this isn't a dig at high grade versus low grade. As you keep saying every week, we need it all, right? Yeah. But my point is, and I've said this to a few companies this week off the back of some reports we've done on Excelsior, which went down not particularly well with Excelsior shareholders, and Sol Gold, which we've been proved to be right, but at the time I think people were losing their tiny minds that we dared to ask questions, and we continue to ask these questions of companies. So I think it's incumbent on companies to just be a little bit more adult with the audience they're talking to, and a little bit less salesy, because this is it's black or white mostly. Black or white, and there's a bit of blurring around the edges, but it shouldn't be completely opaque and made up in some cases, which, I look at some of these, PEAs or PFSs, and I think there's some degree of fantasy in terms of the assumptions that are made, and I just don't think that's fair on us, So, I agree with you. No. Peer analysis all the way. Yeah, no, because again, when someone signs off on an engineering study, so, again, the JORC or the 43-101 requirements, there's somebody who signs off. All it is there's a set of numbers in there that somebody is prepared to, who gets paid to sign off on them, signs off on, right? That's, again, they have the risk of losing their professional designation if they're found to be, egregiously off. But I don't know how many of those cases have been prosecuted. So, that's why you always, try to do peer analysis to the extent you can. But there's the word, right? Egregious, right? You're like, I've paid for those reports as a banker. I know the game here, right? Those guys are paid to sign. It's kind of like when you get an audit from one of the big four, you sit there and you argue the points around assumptions to do with all costs, expenditure, calculations, and there'll be a range. You want it closer to what you're thinking, and they want it closer to reality or conventional, standard practice, and you argue the point, and you'll end up somewhere between, right? And that's in all walks of life, all industries, not just mining, all walks of life, right? That's what happens. How? Because it's a public company, you want to present the best version of yourself. I understand that. But when it gets to the point where you're talking about very technical things and you're trying to get it signed off by a technical person, and you're talking about, well, do you know what? It's underground. So the range gets bigger. Like if it's a sort of manufacturing industrial business,
range looks like this. Mining, because it's under the ground, no one knows what is happening down there. Really, the range is a lot wider, and I think that's where I say, you know, when we look at this, we're a little bit more cautious, because I'd rather be slightly wrong than cautiously than wildly wrong being optimistic, because it changes the way you approach something. Certainly changes the way you would approach an investment. So. I think I'd encourage people to just have a little degree of skepticism and a little bit of caution whenever they're looking at what a company tells you. I know you're CEO of a company, but
agree.
No,
that's
wise words.
As an industry, we have very many black marks against us, so we need to stop putting out bad numbers, and maybe people will start to trust them. So that's the bottom line.
But that's kind of hard. That's kind of. I'm not suggesting for one second you ever put yourself in that position. But you know, if you, as a non-CEO person, you know, you invest in other things. I know you put most of your wealth into what you're doing at the moment, but when you've been an investor previously, you've some way of discounting, do you? I mean, how do you view these reports when you read them?
Oh, no, again, it comes down to first off, one check that I think is always good is, you know, again, does the author of the company that's signing off on these reports, do they actually build these things as well as just do studies? Because if they are known to build them, then they know that there's a chance that they will be asked to build them. And so, you know, when they're on the hook for delivering on the number that they published, then those numbers often are much more credible. So, you know, again, with Canada Nickel, we're using Ausenco. Ausenco's delivered a number of mining projects, you know, on budget, you know, and on time. And that's part of the reason, you know, that we're using them in terms of, you know, what we're doing is to be able to deliver credible capital cost estimates. And then the other part is just the pure analysis. You know, again, there's just, you know, that's why I think Crux is really filling in a gap, is that there used to be in Toronto, used to have 15 or 20 brokerages that were cover small, junior, you know, mid-size companies. And, you know, that's contracted to a much smaller number of people who focus on much larger companies. So there's literally no analysis done at all on whether anything's good or bad, you know, in terms of estimates. So, you know, that's where, again, always try and find the best peers that you can to get comfortable around their capital cost estimates, around their operating cost estimates, around their revenue estimates. You know, to be confident that whether or not they can deliver them or not. So,
wise words. There's been a few other things, a few drill results out. That's interesting. Centaurus.
Oh yeah, no, it was yeah.
You see that?
So we got a good resource upgrade from Centaurus. So they, you know, increased. Again, you know, with the resource update, you know, what you want to look for is, you know, in terms of size and grade, you know, how has that changed? You know, how much has changed by category in terms of measured, indicated, inferred? You know, again, you'd like to see, you know, bigger increases in the, you know, as companies push projects forward, that, you know, material starts out as no resource, makes it up to inferred, and then starts to move it up to indicated, you know, or measured. You know, and so they had a 50% increase in the indicated component to almost 20 million tons of ore at just over 1% nickel, you know, with 200,000 tons contained. You know, again, as reference, the two best sulfide discoveries of the 2010s, Nova Bollinger and Sakatti, which is owned by Anglo American. You know, they were 300 and 400,000 tons respectively in terms of their, you know, contained resource, you know, when they were, you know, what Sakatti where it sits today, and where Nova Bollinger was acquired. You know, importantly for Centaurus is, you know, they're a rare beast in the nickel space today, that it's an open pitable deposit at north of 1%. You know, so a large portion of that, you know, 200,000 tons contained nickel is sitting, you know, at a, you know, very shallow depth that it can be mined by open pit or, you know, or by shallow ramp. So, you know, those were some very encouraging results. And then, you know, Talon had had a very big hole. The stock market loved it. The stock popped nearly a third in one day, which is, something as a exploration development company, those are the kind of days, that you always look forward to and rarely happen. So, they again, with drill holes, is it a step out or is it a new discovery? Is a new discovery, again, is it high grade or a thick low grade intersection? Those are both, generally good. And then if it's a step out, again, how far out is the step out, and then how thick is that step out interval that they've got? So, this was 110 meters of, 25 meters away from a 2008 hole that they drilled in 2008. It was in with their resource model, but it was in an inferred area. And so, that's a nice, the prior 2008 hole was also quite thick. But this was another sort of thick chunk of mineralization. So, it'll be interesting to see whether there's any future step outs, coming from here or not. But, again, we need all the nickel sulfide we can get. So, it was good to see, these kind of good drill results coming from projects.
I think it's fantastic. And it's been quite a remarkable week. We've seen all sorts of, coverage from, the Goldmans, JP Morgans. We've seen people starting to write about it in various other platforms. People are really starting to take note. I think it's going to be a very exciting year. I'm looking forward to speaking to you, though. You owe me a whole bunch of information, a whole bunch of deliverables, please. I want to see them. Looking forward to it. Very much looking forward to it.
Oh, and I think, the biggest thing in terms of sort of the exciting sort of milestones of the past week, again, if in 10 years when we're looking back and saying, okay, where were those inflection points, in the EV cycle, this past weekend Super Bowl, here in North America was one of those inflection points. You not only did you have one large car company advertising EVs, you had two large car companies, advertising, EVs. If you had told me 2 years ago, even as someone who's bullish nickel and bullish EVs, that Will Ferrell would be doing a very long ad for General Motors of all the car companies, talking about how they're going to take on Norway's leadership, in the EV market, I would have taken that bet, at some pretty good odds. So you had GM do it, and then you had Volkswagen, focus solely. That was the sole purpose of their ad, was to introduce, their electric vehicle line. So again, I think if you want sort of no clear demonstration that just, the mainstream of the auto industry is going to be shifting towards EVs, and it might happen faster and more aggressively than a lot of people are thinking. I think that this past weekend was a great data point.
Have you heard Will Ferrell? He's going to be playing Elon Musk in an up and coming movie. I'm just starting that rumor. Okay, that's what's happening here, folks.
Yeah.
Okay.
There we go.
If I say it, it must be true. That's the way I'm looking at that one.
You could be a junior mining CEO.
I know. There's several I'm thinking of. Just hilarious. Yeah. No, let's not go there. Would you watch that movie, by the way? Will Ferrell playing Elon?
I would watch any movie with Will Ferrell in it. So
good man.
Yeah.
So would I. Comedy genius.
Relatively unsophisticated sense of humor. So that's
good. Well, look, Mark, awesome. Enjoy what's left of this week. Well done. I think people are paying attention, which is great news. We'll see you next week. Chinese New Year, so maybe we'll talk a little bit about China next week. Should we do that?
Yeah, there's a whole pile of Chinese data that I thought, given next week, will be fairly low from a news flow perspective. Yeah. That we'll dive into that in some detail, and there's some good nuggets there. So I think it'll be a good discussion next week as well.
Brilliant. You can bring your other two Chinese phrases along. In the meantime, Kong Hee Fa Choi to you, and we'll speak to you soon.
Take care.